having said that, that it's time to actually get in our experts and help you strategize your next week also. Having said that, we will also have to understand a few important news which also made headlines in the day, like government pulling FDI limit, hiking PSU banks and announcing 70,000 crore boost for shipping. But then yes, we are also joined by experts. I have Sunil Subramanian, market expert, and Rajesh Palvia, head technical derivatives research at Axis Securities. Hi, good evening and welcome both of you. So, Sunil, let's just make sense of what happened this entire week, and weekly closing is almost at the level of Feb 25. That is the lowest since then. It's definitely the pharma announcement impact that we saw dominating in the market. But apart from that, the market was also losing steam since Tuesday. In fact, the beginning of the week itself, but then the JST hangover was still there on that particular trading day. But then if you could just help us understand the entire week's trajectory.
I think it's very, very simple, right? If you say take the data out, DIs have been consistent buyers even through this week. So basically what you call as the market giving up gains and market, it's entirely due to an FII selling pressure. Last week, there was a bit of a reduction in the selling, but this week, it's again stepped up. And I would again point it all out to only one factor, the Trump factor. The uncertainty that he's been causing, and not only in terms of today's pharma announcement, I think he's also met with the Pakistan Prime Minister. So the key issue is that FIIs, and I can remind you right now that 40% of the flows, FII flows in India come from one single country, that's America. So obviously what happens vis-a-vis America has a big significant telling on the FII flows into the country. And it's that single thing. And pharma announcement today hasn't helped. But even otherwise, I think that only if there is some optimism around the trade deal happening comes through, you are likely to see a reversal. Otherwise, the degree of correction that's happened is not enough for FIIs to look at India as a value market. So we are still, from their perspective, overpriced in that sense. Maybe not as overpriced as some months before, but still overpriced. And for that to change their mind, right, it has to be that the US-India trade relations are seen to be coming on track. And I think that until that happens, you're only likely to treat every news as bad news. Like both in terms of the H1B announcement and the pharma announcement, the actual impact on Indian IT companies and Indian pharma companies is not so much. Why? Because, like I said, I saw that the top 5 IT companies took only 13,000 H1B visas last year. And most of the pharma exports are generic, which is not even in this picture. But despite that, they're selling, which means that they are still uncertain about whether Mr. Trump is going to stop there. Is he, for example, is he going to make this H1B a running affair like every year? First they announced it every year, then they came back clarification there is no one time. Now again, yesterday when I saw some news reports on Reuters, it seems to be again coming up. So uncertainty. Similarly in pharma, he started off by obviously saying that generics are not included, but who knows tomorrow what he's going to do. So I think that the Trump premium for equities in India has shot up, and naturally that has an impact. What has not also helped, Kavita and Mansi, is the rupee weakening, because that's hurting, and the news around the European front that if Europe and NATO get into a war against Russia, then Russia supplies a lot of natural gas to Europe. So what's going to happen to oil prices? So these are all uncertainties, all entirely from an FI perspective. So I'll summarize it by saying bull economy, bear market.
Okay, all right. Well explained. Yeah, sure. Sunil sir, we'll talk more on the fundamentals of the market. But then Rajesh, yes, in the volatile scenarios which we did see, look at Nifty, look at Bank Nifty, we were surrendering to all the important levels. Now, what according to you should be the strategy for the coming week then?
So I think the kind of news flow which is coming from the US, from the President Trump, I think that is creating uncertainty in the market, and I think market is not able to gain the confidence despite of a lot of reform or a lot of announcement came from the Indian government itself. Market has already broken its important support area of 61% retracement of this entire rally, which was at around 24,800, and now we are decisively broken those level. Nifty is now slipped below to 20-day, 50-day moving average, as well as Nifty is now, despite the PCR ratio is at oversold trajectory of 0.63. Despite that, Nifty is not showing any sign of recovery from the oversold trajectory. India VIX has also moved up to the level of 11.5. We have seen a spike in today's session also. Most of the sector indices which were in uptrend has attracted the profit booking because of this uncertainty. So I think every week if these kind of news flow comes from the US, so I think market won't be able to attract any sustained buying action in market, and I think trend is likely to exhibit further on the weaker side, as the near-term, short-term indicators are indicating that we may see more pressure in the market if it continues to trade below 24,800. So Nifty is down almost 2.5%. Bank Nifty is almost down by around 2%. So 24,800 is the key hurdle now towards the expiry. And on the downside, 24,500 is the immediate put-based concentration. So these could be the levels where we may see in the coming week. But if we break below 24,500, I think then we may see serious liquidation of position in market, and possibly we may see further more lower level in the market. So 24,500 is the key level. If it's break, then 24,350 would be the next level towards the expiry itself. If at all Nifty crosses, and if at all if we see any pullback in the coming week, so 24,800 may act as a first supply zone, and if it crosses, then some short covering action can play out. But again, it's all depend what kind of news flow we get in the coming days. That would be one needs to closely watch it. But on the Bank Nifty, we have decisively broken the 55,000 level support area, and almost now we are trading near to the 54,500. So if we continues to trade below 54,500, maybe downward trajectory may continue, and 5400 would be the next target. 54,000 would be the next target for Bank Nifty on the downside. So on the higher side, 54,800 to 54,000 would be the range for Bank Nifty in the coming week.
Right, so these are the support levels for Nifty and Bank Nifty. But then, Sunil, we also want to understand now the trajectory for FIIs. We've already seen a major sell-off trend by FIIs. Specifically, if Thursday, if we talk about 4,995 is the figure that we saw. What according to you, will it be intensified now? Because also one more aspect that we want to discuss with you is the weakness in rupee. Today's closing also plays a very important role as far as the rupee's all-time low number is concerned. How are you looking at these two factors playing out in the market for next week?
I think next week both will be under pressure, because I think news today has only come in on a Friday. So obviously, Mr. Trump really gets to action on Saturday and Sunday. So that's an uncertainty. See, it's just that people can't take any planning action on the future, right? The aspect on the currency you're saying, like I said, the weakness of the currency is also because I think what's happened is US GDP data has come strongly, and so the dollar has strengthened, if you see over the last day or two. So that's naturally led to rupee weakening. I also mentioned the crude price risk that is there if NATO gets into war, because Russia is slowly, I think, expanding. It's sending its drones into all of non-Ukraine related NATO countries. So it's a worry. It's a global uncertainty. So I see that the rupee will continue to be under pressure, because if crude is weakening, it's a double whammy. Because if crude is weakening and rupee is weakening, then our net rupee oil prices will be up that much more. So for the coming week, I don't think there's any clear direction that you will get, which is going to be a positive direction, because unless I don't see Mr. Trump or anybody in the mood of saying anything. Mr. Piyush Goyal's visit to the US is a more important one. So I don't know, the trade deal is one thing. One can't say when it will come through. The earlier, the better. That's number one. Number two would be that I think the October period for FIS is critical, because I think that it's a crossover period. They will then turn to look at 1 year forward a little later. So I think probably in the first week of October, which is the week after, you will see some easing because the valuations may not look so bad, right? Of course, any clarification on H1B or on the pharma coming through on a positive matter will also help. So like Rajesh is saying, it's heavily news driven. So to sit and predict for the next week, we'll have to first take a tape and put it on Mr. Trump's mouth, tape up his fingers, and take his Truth Social account away from his hands.
That's so nice and interesting, Sunil sir. But yeah, that maybe we cannot do that, but we can only and only hope that over the weekend something like that doesn't pan out. Rajesh, literally all the sectors were in red in the last trading session, and of course during the entire week also there was a lot of volatility. But deeper correction seen in the IT sector. Now this is a sector which has a connection to the global front as well. What is your take on the IT sector? Because I'm sure at present the market participants are not entering the space, but then there are sure participants who have already entered IT space, be it the mid-cap IT or the large IT plays. What should be the strategy for them?
So if you analyze the overall structure for IT sector itself, I think its sector was not in bullish trajectory, despite we have seen that broader market has recovered. But looking at the breakdown in current week for Nifty IT index, now Nifty IT index has broken 34,000 level, which was the important and multiple support area on the weekly chart. So if it continues to remain below 34,000 level, I think we may see further more liquidation in most of the IT stocks, as now after this H1B visa news flow, we have witnessed, that most of the long positions has been cut down in the large cap IT as well as in the mid cap IT by the short term investor as well as traders. So looking at the breakdown in most of the stocks, we believe that we may see further more weakness in the coming week for Nifty IT. Maybe if it's remained below to 34,000, the next level on the downside would be around 33,250. That's the level where we can see for Nifty IT index. Large cap ITs stocks are still under pressure. There is no recovery. Most of the stocks have broken their previous swing low also. So which is also showing weakness on the near term short term structure. So maybe large cap IT may get further more supply pressure. Even the mid cap IT, which were trying to recover in last rally, but now after these news flow, the mid cap IT stocks are also attracted more supply pressure and profit taking. So I think here also we may see further more weakness. So I think one should avoid at this juncture till this uncertainty is there and the market structure is not recover, because the structure for overall IT stocks are still in the negative side. So in this kind of market, the sector where we are already witnessing weakness would recover in last. So I think from my side at this juncture, avoid IT stocks for some time.
All right, so IT to avoid, but then Sunil, now should we be focusing more or maybe going more aggressive towards domestic facing sectors and counters? Should that be the strategy? Because definitely it's festive season and no one wants to ruin it. I mean, yes, the market is not sustaining the higher levels. That is really true. But then your portfolio can definitely, right? So what's going to be the strategy then?
So I would say that if you have a slightly shorter term 6-month outlook, I would say consumer discretionary, auto and consumer durables are probably, because the Diwali and the Christmas season will extend. The good news will flow around the sales and all of that. And come January earnings season, these numbers will reflect. And if they are given some discounts, there could be some correction. But the good news is that the season has gone well. So from a shorter term, I would say the market, the least resistance or correction would happen in the consumer discretionary space. But if you push your outlook a little bit longer, right, to let's say a 12-month to 15-month period, I would actually argue that today is a good time to start a buying situation. Again, I would say stick to the domestic space, but slightly change your portfolio within the domestic. What do I say? Because to me, this consumption boom, however it plays out in terms of the EPS of the consumer companies, we'll know only in January earnings season. But definitely top line sales is going to grow up, which means capacity utilization will improve, and which should be a good trigger for private capex to start. right? And not only that, the second leg of your GST cut impact. In the festival season, it will be on the consumer durable, consumer discretionary. But the second leg impact I expect on the real estate and the housing sector. And why it won't happen? Because first, it's not a good time for real estate, the monsoon and all that. Second, real estate not something that you buy in a festival time. Rather, you buy something you display like an auto or a refrigerator or something like that. So the impact of the GST cut, which is there on cement and other input costs, plus the bank EMI cuts, will mean that real estate will be the place where people can upgrade their houses, or in affordable housing, people buy their first homes. So I think, but the real estate sector needs some time to take those new plots of land on the outskirts of the city, plan an affordable housing project and then launch it. Because right now their focus is only on the high end, because that's what been selling. So give it that time, I would say 6 to 9 months time if you give it, real estate should be a good pickup from the GST. The second aspect is private capex, which means that yes, cement, steel and all of those building products, but industrials, right? Because engineering goods, they are the ones which the private sector capacity expansion will need.
Absolutely.
So that will start and that will kickstart. And the people who are going to execute that are SMEs and MSMEs, where the lenders to those projects are going to be PSU banks.
Correct.
Because the NBFCs and the big private sector don't have a comfort in that sector.
Yes.
And loans will not only grow, the margins also will be higher because they're at 12 to 14% interest rate. So I would say if you have a slightly longer term perspective, I would pick these three sectors:
Sure.
real estate, industrial capital goods and PSU banks.
Absolutely, absolutely. And Rajesh ji, from you, we would want the stock specific recommendation for the trading sessions next.
So one on the buy side and one on the sell side. From buy side, again, I'll keep my bullish view on Ashok Leyland as stock is still holding the strength despite of this volatility on a weekly chart. Stock managed to give breakout and holding that breakout level. Looking at the data, we believe that towards the end of this expiry, I think this stock has potential to continue furthermore upside. Possible target towards 150 to 152 we are projecting. 136 needs to keep as a stop loss. On the short side, pharma space has attracted supply pressure, especially because of this news flow, and most of the stocks have broken the their important support area. Biocon, we are recommending here to short as stock has broken its important support area on the weekly chart. Stock is now slipped below to all its near-term, short-term moving averages. So looking at the breakout, we hold a bearish view on Biocon, and we believe that on the downside 326 could be the next target. So one can go short in Biocon future with stop loss of 346.
Alright, so these were your picks, and with that I think it's a wrap. Thank you so much both of you for being a part of this very special show and helping our viewers understand the market strategy and also getting them prepped up for the next week. And on that note, it's time to sign off from me and Mansi Dave, but you have to stay tuned to ETNOW for more updates on the market and global news. Thank you so much for watching. Goodbye.